This is Andrew Stotz of Stotz Investment Research, and I'm going to talk about FVMR Snapshot of 4 select markets in Asia. Remember, my FVMR stands for Fundamentals, Valuation, Momentum, and Risk. Today I'm going to look at India, Philippines, Thailand, and Vietnam. I unfortunately don't have the data for Pakistan, but I hope to get that soon. Let's take a look at the layout. First of all, I want to look at the global equity FVMR snapshot. This starts by looking at the world and then dividing the world into emerging and developed markets. And then we see developed non-US also at the bottom. And if we want to, we can go through some numbers here. First thing is the ROE of the world right now is at about 12.8%. And emerging markets is slightly less at 12.4. We can see Asia has got about 12.5 ROE, so just about in line with the world. The PE of the world is at 17.2 versus emerging markets at 13.5. We can look at Asia and see that Asia's at 13.7 and then 12.2 for PE in the next year or two. Remember, this is consensus data from a bottom-up aggregate that I've done. Price to book's at about 1.7 versus 2.2 globally, so Asia, particularly emerging Asia, looks cheap. If we look at momentum, we can see strong EPS growth in emerging Asia, 13.7% for the world, but 24% in emerging Asia. Price change over the last year, we've seen emerging markets in general moving by about 19.7% versus 17% for the world. In fact, it's been an amazing run in the stock market. We can see emerging markets up 22%. So a fantastic time over the last 12 months. Trump is making the markets go up, but for how long? That's a whole nother topic. Now, let's look at gearing. And here you can see that emerging markets have less gearing than the rest of Asia at 43.5%. And then we look at volatility here, and we can see that volatility globally is 6.3%, emerging markets about 9%, and Asia is about 9.5 on the last 12 months of volatility. So next, we're going to look at the global FVMR snapshot by sectors. But first, I'm going to get a sip of this coffee here called Wilbeck Coffee here in Taiwan, where I am today in my lovely hotel room. That's pretty good stuff. Now, let's just look at the sectors for a few minutes, and we can see that energy has got ROE of about 6.5, so down at the bottom and coming up from the bottom. And we can see infotech at 20.5, quite high ROE, and healthcare at about 20.4. Now, PE valuation, well, when cyclicals such as energy are expensive, that's the buy signal. So we're at the bottom of the cycle, just coming up on oil price. We can see that in energy. And then real estate we can see is about 22 times, so relatively expensive. Now, price to book is about 4 times for infotech, so you're paying 20.5. You're getting 20.5 in ROE, but you're paying 4 times for that. And consumer staples is about 3.9. If we look at earnings growth, we can see, well, the recovery in energy and materials is happening. Massive returns there. And we can see that the price momentum in infotech is about 26-27%. It's hot. And telecoms is pretty much flat. Let's look at risk for a moment, and this is price risk. And we can see that the price risk for energy sector is very, very volatile at 11.9 and 13.5 for 3 months and 1 month respectively. So this gives us a picture of the overall globe. Now, let's take a look at India. So I'm going to keep the world numbers at the top line. Let's look at India compared to the world. The world has ROE of 12.8, India 14.2. Well done. Now, if we look at PE, you're paying a little bit for that. The PE of the market globally is 17.2 and India is 20. Remember that much of that 17.2 is coming from a very expensive US market. So India looks a little bit expensive there. Consumer staples sector, the most expensive sector within the market in India, quite expensive at about 38.7 times. EPS growth, well, we had a slowdown in EPS forecast by analysts to 9.4 for this year versus 13.7 worldwide, and we can see that analysts are pushing that into next year. Now, sometimes when a market runs really well over a long period of time, analysts just keep pushing out their optimism and companies start missing their targets. So If we look at healthcare, we can see a negative item and then coming back in 2018 at 31.6. So it's a bit of a bounce or recovery. It's a questionable whether that's going to drive the share price. However, let's look at prices over the last 12 months, the last year. The world is up 17%, India is up 9.2%, so the slowdown is happening there. And gearing is a little bit higher in India, and later in other slides, in other PowerPoints I've presented, I've talked about the banking crisis that India is facing right now, and they've got a sizable amount of debt, not an emergency for the companies at 75.6, but not small. All right, let's move on to Philippines. So again, the U.S. ROE is 12.8, Philippines is 12%, so slightly under the global average. Now you'll see a lot of NAs in there because we don't have enough companies in some of these sectors to produce a robust sector average, so I put in NA there. Now we can see that the PE of the Philippines is at 20.2 times, so a little bit more expensive for the market, but slightly lower ROE. We can see financials have a 18 times PE for about a 10% ROE. So financials are not that expensive, particularly if you look at a price to book basis at 1.8, 1.7. But on a PE basis, maybe a little bit expensive there. Now, EPS, we can see EPS growth is about 3.7 according to analysts' forecast, which is much, much lower than 13.7 EPS that's happening globally. And consumer staples should see a slight recovery according to analysts, up by 12% in 2018. Gearing is pretty high, and what we can see is that gearing falling in the past 12 months. Now, this number is a little bit difficult to calculate. Sometimes some companies have reported and others haven't. So I would take that with a bit of a grain of salt, but just would say that the gearing is slightly higher in the Philippines than it is in the other markets. All right, let's look at Thailand. So here we have Thailand versus the world. The world, 12.8 in ROE. Thailand at 12.5, so about in line. And a slightly cheaper than world average PE of 15.9. Healthcare is very expensive at about 39 times this year. And we can see financials are relatively cheap. You can buy them at 1.3 times price to book and about 10 or 11 times PE. Now, NPLs have been rising in the banking sector in Thailand, but we've seen from prior work that the NPLs are not in a crisis position. Now, EPS in the world, 13.7, in Thailand, 6.8, so half the growth of the rest of the world. Darn, that's a reason why the PE probably won't re-rate much from here. We can see that consumer staples is seeing analysts forecasting strong momentum, up by 19.2% in 2018. And then price, we can see that globally the markets have done well. Thailand's up only 11% versus 17% for the rest of the world. Now let's take a look at Vietnam. Now actually I have to tell you a secret. This is my first time looking at the Vietnam equity FVMR Snapshot because we've just constructed this one. Now the first thing that I want to show is that the ROE of Vietnam is at 15.6 versus 12.8. So good, high ROE market. That's pretty awesome. Consumer staples companies are making about a 28% ROE. And if we want to look at PE, PE is at about 13.8 times versus 17.2. Price to book's about in line. And what we can see here is that the price to book of consumer staples is pretty high at about 5.5. Financials relatively cheap at 1.5. And NPLs don't seem to be a major problem right now. If we look at earnings growth, analysts are expecting about 6.2% versus 13.7 globally. So moderate earnings growth this year, 16% is what analysts are expecting next year. If we look at the share price over the last 12 months, well, Vietnam market has flown at up 29.5%, and gearing we can see is much lower. So you get a higher ROE for a lower level of gearing. Now, get our free FVMR snapshot. What does that mean? Well, every week you'll receive the updated equity FVMR snapshot for the countries that you're interested in. This one page covers FVMR, fundamentals, valuation, momentum, and risk. And after signing up, you'll receive a one-page PDF every Monday. Don't you love Mondays? BecomeAbetterinvestor.net/FVMR snapshots is when you can sign up. Have a great day.